How's it going, everyone? Welcome to another video. Now this video will specifically be covering how to put all the concepts you've learned together. You've gone through essentially the entire course and you're towards the end of it, and you are essentially trying to piece everything you've learned so far, because what the course has covered is a variety of different concepts, right? Now I'm going to be running through how you can piece all the different concepts you've learned together and how they work in union. So let's get into it, right? Now, one of the first few things you've learned in the course, it is market structure. And sorry, not market structure, it is order blocks and supply and demand. These are certain things you've essentially learned, right? How to spot a supply and demand zone and etc., right? So I'm just going to run through exactly how I look at the charts. This isn't essentially me covering my take on the markets, but I'm just going to be explaining how the concepts work in union. So let's look at the charts, right? Let's look at the 1 hour first. I'm just going to be using a 15-minute time frame for this example here, and we can understand how the 15-minute works now. So first off, we have some clear supply zones here, right? So if you look at a 30-minute time frame, you've got a clear supply zone here, and this supply zone has broken structure. This supply zone here is an extreme point of essentially what caused the break of structure, right? So we have a supply zone here. Now let's have a look at this one here as well. Now what we have here, right, the first thing is we have a supply zone, but the other thing what we have is a demand to supply, right? So if we sort of understand and look at what's happening, is that we first have a push up here, and the other thing we have, right, is we have this demand zone here. Now this demand zone has actually broken structure, so I'm just going to mark this up so we understand that this is okay. This is indeed a demand zone because we have broken structure through an impulsive move up. So what we have is a demand zone that has been created, and the next thing we have is a demand to supply. So demand to supply is something you've learned as well, and this is essentially an example of how it looks like. You can see how price did indeed react a bit of the demand zone. We have pushed up, but we've failed to follow through with it and essentially broken this structural point as well. So I'm just going to mark this up here as well so that you understand exactly what I'm looking at. Now we know that this demand zone has failed, so this supply zone essentially will be tapped in and respected. Now another thing we also observe is that if we look at this range created, right, so if we draw, this is the high, this is the low, take a premium versus discounted tool and we essentially mark it up, right? We mark up the high and the low. We can see that the zone is currently within premium zone, so this is where we'd want to short as well because we are currently in the premium zone, right? The other point I'd like to also point out is what we can see here with the way price is moving is we actually have sort of a range being created with liquidity, right? We have this range here where you've got buy side liquidity, you've got this liquidity here as well. So you've got both buy side and sell side liquidity resting. So at this point we have quite a bit of cause as to why price would come down, and the first thing we have is we have a demand zone failing here. The second thing we have is we have a demand to supply zone, so we have a supply zone that caused demand to fail. The third thing we have is a premium versus discounted zone, and this is currently within a premium zone, so this makes quite a bit of sense to short from. The other thing we have is we also have a bit of liquidity resting. Now when you move further down the course, you also probably looked at order flow. Now what is the order flow currently in this region? So let's look at the line graph real quick. What kind of order flow are you seeing? Now clearly we see bearish order flow being created, right? So you can see we have low lows being created, right? We failed to make this low. At this point we had a pullback to probably mitigate a supply range here, so we mitigated that supply range. We continued pushing down, breaking these lows, and essentially we're currently within bearish order flow, and we also have a point here that mitigated this. So we are currently in bearish order flow, right? So because we are currently in bearish order flow, that gives us reason as to why we should and will be looking for shorts in this region, right? So what we've covered so far is we understand how to look at our POIs, because when we look at POIs, there are specific, number of rules we look at. The next thing is we've also utilized a supply to demand, demand to supply concept in this. We've also utilized the premium versus discounted tool. We've also used liquidity. Now we've also used order flow, because we understand that the overall order flow of the market is bearish. So this is an example of how you use all the concepts in Union, and I've kept it short and simple because I could go on and on about this, explaining how to use it by showing different examples. But the first thing you want to remember is when you look at the charts, you want to make sure that all the concepts you've used is actually being applied, or at least most of it, right? There are certain instances where you can't use all the concepts, especially in cases where you're looking for a demand to supply zone. You won't necessarily see a supply to demand zone, right? So this is an example of how you combine all the different concepts you've learned, how you look for trades, right? Now looking at this, right? Clearly we have a 15-minute zone mitigation. So likely there would be possibly a 1-minute entry within this, right? And I'm not going to be covering entries in this video because we already have covered it. So I'd like you guys to actually go and have a look at this. Now you can see exactly what date this is, so do look at it. And if you have any entries that you can see, pop it in the chat and send it over to us, right? So to be honest, this is a complete and overall overview of how you use all the concepts in Union, right? The concepts I've covered so far will be market structure. So market structure, you can understand that we're currently in bearish structure at this point. We're also in bearish order flow. We have supply zones forming and mitigations of supply zones. We also have the demand to supply zone here. We have premium versus discounted. We also have liquidity here. And essentially we have a complete full mitigation, and let's have a look at how it goes, right? So you can see how it has swept liquidity. So this is an overview of how you use all the concepts in Union. This is how you put all the different pieces of the puzzle together to essentially create the strategy. Now, after you've essentially understood how to create the strategy, the next thing I would likely ask you guys to look at, or if you haven't already looked at, is strategy variance, to understand how you can utilize putting all these concepts together in different methodologies or approaches. There are a couple of different approaches you can use. There will be scalping approach, there will be a swing approach, and a mid time frame approach. So do be sure to look at those. And if not, that'll be it. And I hope you guys have enjoyed the video, and take care.